The one, market depth, scores dipped by an average of 1 point to 40.5 from 41.5 in 2020 due to lower equity market turnover, which has persisted since the onset of the COVID-19 pandemic. While market capitalization rose in almost all the countries in the index, it was not enough to offset weak trading activity. The second pillar, foreign exchange reserves, actually grew by 24% in Pillar 2, which is access to foreign exchange, with South Africa coming first and Eswatini moving up 11 places. However, a lack of liquidity in the FX market, as measured through interbank figures, weakened across almost all countries. And onto the third pillar of market transparency, tax and regulatory environment. Due to lower marks in the capital market development, we saw a change actually in that particular issue. When we move to slide 4, which is capacity of local investors, once again we saw earnings full mark for having a deep pension market relatively to the size of its population and security market, and this was in a particular country actually. However, the weak potential on the part of the domestic pensions market meant that 19 countries failed to score over 50-point mark. Countries generally perform best in Pillar 5, that is macroeconomic outlook, achieving an average score of 62. The macro impact of the pandemic continues to be felt in the sector, with economic growth for many countries subdued and public finance showing strain. And lastly, Ghana, Nigeria and South Africa earned full points in Pillar 6 of enforceability of standard master agreements. Mauritius, Uganda, Zambia and Malawi miss out on joining these countries at the top of the pillar by not yet fully adopting standard master agreements, and that is quite in line with World Standards Day. But I want us to shift our conversation today because I'm a huge film fan, and majority of us are Kenyans. When we are